G'day everyone. I'm just about to kick this thing off. We've got a few entered the room already. Waiting for about 30 people to jump in. So I might give it a few more minutes. It's only just gone past 12 o'clock. If everyone's happy just to just chill out for a sec and we'll kick it off shortly. Just for those that have joined, hopefully you can see and hear me okay. I think there's a chat or Q&A functionality as part of the presentation today. If anyone could just write in chat, perhaps if you can hear me and see me okay. Thanks for everyone's patience. We'll give it another couple of minutes. Still waiting on quite a few people to jump in, so hopefully they've got their links and navigating through now. I'll begin very shortly. Okay, thanks for waiting. We might kick this thing off. Others will join as we progress through. Just a bit of background who I am. My name is Ashley Rowan. I'm a financial advisor here with Consortium Private Wealth. I've been a partner and an advisor with the business for the last 14 years. Consortium Private Wealth is self-licensed, and we are located in Horsham, which is pretty much halfway between Melbourne and Adelaide. Hopefully those in attendance there, no doubt that you've spread out across the state and perhaps Australia as well. As part of the housekeeping with today's presentation, we've got a Q&A functionality here. So if you've got any specific questions, jot them through that functionality, and I'll get to them at the end. Otherwise, if there's any comments that you'd like to make throughout, so for example, if the audio is not working or the picture drops out, whatever it may be, please let me know, and I'll keep a close eye on that as well. Now, in terms of the presentation, I'll just navigate to the next slide. Just need to state a general advice disclaimer. This is pretty much general information, not tailored to anyone in particular. There's no client situation through here, but there is an example of aged care fees in play at the end of the presentation. But what we encourage you to do, if you need to seek personalised financial advice, go see a financial advisor. Now, the presentation should go for about 30 minutes. It will be recorded, so hopefully we can send that out after today's meeting. But as I suggested before, feel free to list your questions as we go along. Now, just getting the slide in view. Now, in terms of when it comes to aged care, what we try and encourage our clients and when we give these presentations is to always plan ahead. We want to achieve life's goals and manage these transitions. So one of the biggest transitions we make is as we go through wealth accumulation phase and we retire, when we transition into permanent retirement. So we want to accumulate enough wealth to provide a healthy standard of living and to achieve all our goals and objectives. Most people will generally ignore later stages in life when it comes to residential aged care and try and understand the financial implications that come along with that move. So when it comes to retirement planning, any advisor hopefully will see the need for income or access to capital to fund some care expenses at the end of days. We generally like to think there's 3 phases of retirement. The first phase is when we're active. One sec, I'm just trying to get these slides a little bit bigger so I can see them. One tick, sorry about that. 3 phases of retirement generally is when we're very active. That can be up to the first 10 years of our retirement. Then we start to, in most cases, we begin with some form of disability where we start to slow down, and it's the final 3 to 5 years in which we have severe disability, which tends to when we reach out for that extra care and support. You can see both on those on the picture there, the life expectancy for a male currently is about 85, whereas the females tend to live a bit longer than the guys. When we try to produce, when it comes to retirement planning, we're looking at income needs. We want to sort of keep up with inflation. So that image on the left-hand side is essentially setting our income goals and having that increase over time to keep up with the cost of living. That's how we like to envisage retirement looks like, when in fact, often the opposite occurs. We want to, while we're kicking off retirement, we're very active. We've got a lot on our mind in terms of trying to achieve our goals and objectives. So our income needs are high to begin with. But as we stated on the previous slide, when we start to get a disability here or there, we become less mobile and agile, and we begin to slow down. So our spending needs decrease. So you can see on the right-hand side the reality image there. Our income needs are going down through to phase 2, and as our care needs increase, our income needs return. So beginning and end of retirement is where we need the most income. When it comes to aged care, there are generally 3 options. If you see the green boxes on this image at the moment, on the right-hand side we have residential aged care, whereas on the left-hand side we may receive care in a retirement village or care at home. If it's residential aged care, so we give them the right, we need to qualify for that services because there's a lot of government funding, and we generally start the process through the myagecare.gov.au website. There's medical assessments to be completed, and there's also an assessment of your income and assets to help determine the cost of your care and what you may have to contribute. If you're looking at, on the other side, your private home receiving care, if you're looking for government funded packages, so those home packages, that will require both a medical and a financial assessment to qualify to receive home care packages in at your home or even into a retirement village. Whereas on the other hand, either retirement village or private home, you can arrange private care at your own expense to help make you comfortable at home. Just on to the next slide. When it comes to a retirement village or residential care, there's some pros and cons for each, and you can see it listed through there. With the retirement village, what we like to summarise is, it's all about enjoying a certain lifestyle with these potential facilities, and you do pay privately for that. There's arrangements in place based on what you need to achieve and what you're comfortable doing. There's financial risks associated with that, and one of them is, let's say, for example, retirement village, the private operator goes bust, your money's at risk and you may lose your money. Also, you've got to get a great understanding of what you may receive if you go to leave a retirement village. Generally speaking, not all the times, but in most cases, there's a deferred management fee, which can be quite an excessive amount. A common number that I've seen in the past is, let's say your entry price. You've paid $200,000 to go in, as an example. That's probably quite cheap these days. But the exit price I've seen calculated at 3% over a 10-year period. So if you've been there longer than 10 years, 3% each year over 10 equals 30%, and it could be potentially against your entry price. So as an example, where I've used $200,000 when you bought in, 30% on the way out, you may have to hand back $60,000 when you leave. Now, there's certainly variations of that calculation, but it's very important to read the contract with Retirement Village because there's no standard contract for all, whilst they may be similar. You've got to understand those and probably suggest that you seek support from a solicitor or even a financial advisor can run their eyes through that. Residential aged care on the other side of things is government subsidised. There's a contract in place there. It covers everything. It covers care, accommodation. If you pay deposit, so RADs, there's lots of new terminology here. If you pay a deposit for aged care, they're government backed. So whatever happens to the facility shouldn't impact you financially. And they are refunded in that instance. And it's essentially fully supported living. So if you can think of what you may need in your later stages of life, it's fully covered in that environment, whether that be food, care, roof over your head, heating and cooling. We'll focus on care at home for a moment. I'm just double checking to see if we've got any questions, which we don't. So bear with me. So care at home. Now, the aim is to make it easier to remain living as independently and possible, as long as possible at home, and reduce pressure on your family. So that's a quick summary of that. And what we feel the government are trying to do is replicate residential aged care by providing those services at home. Essentially, we cannot build aged care facilities fast enough, and they're terribly expensive. So care at home can provide support such as cleaning or gardening or helping showering or just doing daily tasks. It also depends on, what family support do you have at home? Can sons and daughters come in to provide the support? Do you have a spouse who's fit and able to? Is it appropriate? Once again, with the government support and the funding that you may receive, are the packages available and what is the demand for packages? So that may be another issue in itself. When we talk about packages, we talk about there's a bit of a process to go through, and the message from today's chat should be about, don't delay things, be active in terms of searching for information and asking questions and beginning the application process at the end of the day. If you're looking for home care support, you can see based on that model there, it can take up to 11 months to begin thinking about it and the application process to actually receiving a home care package in-house. So it's broken up, and these are average sort of times that we've been notified and we've experienced with other clients as well. Begin at the My Aged Care website. Your expression of interest will be lodged, and an assessment, a medical assessment of your needs will occur after about 6 to 8 weeks. In that time, you may want to research providers in terms of once you receive your package and the funding's there, who's going to provide the services. So there's going to be a case manager that you'll need to investigate and find a fit. Where we're located in Horsham, which is a smaller regional town, there's still quite a few operators who actually work and live in these services. So there's choices and options there for you. If a package has been allocated, you've been given that approval. Once again, you choose the provider who's going to issue that and you sign their agreements. The actual delivery of service, as I mentioned, may take up to 11 months. So the point is, if we need it now, don't wait. Or if we need it in a few months' time, don't wait. Begin the application process in advance. What does it cost? In terms of home care packages, there's different levels. So at the bottom of that chart, you can see level 1 through to level 4. That's the value of the package as it stands. Now, these slides are probably a few months off, so the funding typically increases over time. What we find is there's a basic daily fee of about $12.75 per day. Now, that will get indexed up a couple of times a year by not much. There's also an income tested fee. Now, it's based on whether you receive the full pension, maybe you're a part pensioner where you receive not the maximum pension, or you're self-funded retiree. So the maximum fee on that begins at $4,500, let's say, for a full pensioner, up to a cap value of around $18,000 for a self-funded retiree. The income test that they do based on your assessable income will dictate the exact amount down to $1. As you can see, there's an annual cap of about that $18,000 figure. But there's also a lifetime cap there as well. So if you're on a home care package for quite a number of years, you can potentially max out your means tested amount. You can see the value of the packages, like I was alluding to. Yeah, they can be quite valuable. So for level 4, which is simply you require a lot of care at home, there's a lot of funding from the government that will come through, which you can assign to however you deem fit, whether it's helping with cooking, cleaning, whatever it may be. You get to design your package. When it comes to residential aged care, I'll cruise through to that. It's essentially, it's fully supported living. It's the accommodation, it's the care support, it's daily activities. There's a social side to these places as well, and it's personal care. It is to replicate, your home, but with the support of providing aged care as well. So it's essentially got everything under the one roof. Is it expensive? Some people like to hear that accommodation costs, we hear the old terminology, accommodation bonds and deposits. They're $400,000, they're $500,000, they're $600,000. They're big numbers. There's not a standard across the board. Each facility have got to dictate what their costs are and why they charge that much. But at the end of the day, the amount of government support each resident gets is extremely valuable, and which is why they're beneficial, which is why they're in such high demand. There's potential, just the care side alone, from the government funding point of view, up to about $175,000 per person. And the maximum that you may contribute towards your own costs of care is up to around $56,000. Think self-funded retirees in that instance, with quite a few assets behind them, may be the only ones in that instance. But everyone else will contribute at least, the $22,000 figure. When it comes to aged care, there's 4 fees we need to look at. They're summarised through here. Let's go through each one of them. The accommodation cost pays for the roof over your head. How I like to describe the accommodation costs is, as we transition through retirement, we may have a house, we downsize for lifestyle purposes. So there's a transaction happening. We change where we live to make ourselves more comfortable. As we go through our retirement and our care needs increase and we need residential aged care, we there's a transaction that happens. In most cases, a lot of people will sell their home if they need the financial means to take that next step. So a transaction happens where we buy another roof over our head. Think of it no differently. So the accommodation costs we can pay by either lump sum, or if we don't have access to capital, there's a rental style arrangement we can opt for, but it tends to be the most expensive one. Once we've got our accommodation sorted and agreed to, and we become a permanent resident, we're then asked to pay some ongoing fees as well. The basic daily care fee covers the cost of our care. I've got it on the slide there. It bends $61.96 per day. As I said, these fees get indexed up slightly. It is currently $63.57, and that only changed within the last week or so. Everyone in aged care is asked to pay the basic daily care fee, whether you're a self-funded retiree or whether you're you're on the full age pension. The means tested fee, similar to home care packages, they will do an assessment of your income and assets, and they'll work out, well, how much can you contribute additionally towards the cost of your care. There are annual caps in relation to that particular fee. The annual cap at the moment is around $33,000 per year, and the lifetime cap is about $80,000. If a resident transitions from the home care package system and into the residential aged care system, if they've been charged an income test fee before, that will go towards the lifetime cap here. So that's probably very beneficial for some. And lastly, there can be additional expenses with residential aged care. We find this more in the city areas rather than the regional areas. And that's just to provide a few lifestyle bonuses, such as it could be pay TV, it could be a choice of meals in the evening, it could be a glass of wine with tea. And this is something that you agree to directly with that aged care provider. We look at accommodation. I want to focus on this to begin with. From the accommodation side of things, as I mentioned, you can pay by lump sum or an ongoing rental arrangement. Let's go into that in a bit more detail. I'll use an example of a $500,000 deposit. Now, if my client has access to capital and they can afford to make that deposit, or if they've got a home they're willing to sell and they can come up with that, 9 times out of 10, I will recommend paying for an aged care deposit via that lump sum method. Now, at the end of the day, it's up to the resident or the resident's family to decide what method they like to take. You're not going to be forced or pigeonholed into one. If you do pay by lump sum and you pay the full amount off, then that's your accommodation cost sorted. We don't have to worry about that again. If we can't afford to pay the lump sum completely, or we don't decide to pay it at all, we can choose the DAP, which is the daily fee. Essentially, it's the daily accommodation payment method. The current interest rate that you'll be charged, I do believe, and I've got it here, is 8.38%. Let's say, as an example, and I've got a calculator here as well, that an aged care facility has quoted us $500,000 as a deposit, and we've paid them nothing up front. So the aged care facility will say, okay, no worries, we'll charge you the DAP, which is $500,000 at 8.38%, which is about $42,000 per year, or divided by 365 is almost $115 per day. If you have cash flow, high cash flow, if you've got money in the bank that can be drawn down over time, this method will work. It's not the wrong method. It just, for me, tends to be the most expensive one. So I like to strategize around ways in which we can pay some form of deposit towards our accommodation costs. Now, that's the combination method, which is on the right-hand side there. Let's say in that example, they've asked for 500. We've given them 200,000 as a lump sum. That's okay. We get to make that call. And that just means the amount we haven't paid is 300,000. They'll do the 8.38% charge, and they'll charge us about, $24,000 or $25,000 per year in interest as well. It is up to the individual to decide how they want to fund that. And generally speaking, the aged care facility will give them 4 weeks, I think it's 28 days, to decide how they want to pay. And then keep in mind as well, I want to put this out here, that in some cases, to be able to afford to pay a deposit, we may need to sell a house, and that generally doesn't happen within 28 days. So you may go into aged care, pay nothing up front, but after 6 months that you then pay the deposit, that's fine. We can do that. Now, the refundable accommodation deposit, it can be scary for some, particularly when we're talking about hundreds of thousands of dollars. Now, to reassure you, it is used to give you the right to live in an aged care facility, and it is fully refunded. If you can afford to pay your ongoing costs, and in some cases when you've got little cash flow, little retirement income, you may not be able to afford to pay your ongoing costs. You can have some of your ongoing costs deducted from the bond that you've paid. That's complicated, can be a bit messy. It's only applicable for some. However, it is an option as well. Generally speaking, as I mentioned, it's fully refunded. Now, the way in which that money can come back is, as a resident, if you were to leave the aged care facility, maybe go to another one, the facility will repay your deposit. But in most cases, if you were to pass away in aged care, the deposit gets refunded back to your estate. If an aged care facility go bust, the government steps in, will pay the money back to the residents. We can also strategize around Centrelink planning with this, because if you pay a deposit for aged care, that deposit is not included in your means testing for the age pension. So for those who may have been part pensioners or self-funded retirees and not eligible for the pension, in a lot of cases, we can actually get the pension again or significantly increase it. So there's a lot of strategic planning around that. And lastly, the money's set aside. It's not going to go up, it's not going to go down in most cases. It's potentially preserving an estate asset, which can be very beneficial. If we got beneficiaries involved, they're worried about funds will be depleted whilst their loved ones in aged care, perhaps. Now, when it comes to, I might just quickly check questions or chat. Won't be a moment. Which were all good. Okay, I'll go back a slide. Now, when it comes to choosing which residential aged care facility to transition into or on behalf of the loved one, out in regional areas where we are now, we're not spoiled for choice. There's not a great deal of options, however, so it's generally, if a bed becomes available, most people will try and jump on that and take it up as quick as they can. However, in the city areas, there's a bit more competition there. How would you normally decide where to live? It is the same pretty much as if you're buying a home to retire in. What area do you want to live in now? Will you be close to family who may provide that support? If mum and dad are in a regional area and the kids are all in the city, is it best to look at aged care facilities in the city because it's closer to that support? Another one, what can I afford? Now, they're My Aged Care website, and there's a link down below. And obviously, you can't click on that, but if you Google My Aged Care, you'll get there pretty easily. Each aged care facility need to advertise their prices. So you can search by postcode or location, what type of care services you may require, and it's all listed through there. You can look at, they'll quote their accommodation prices. The basic daily care fee is set by the government, which at the minute, like I mentioned before, is about $63 per day for all residents. But the means tested fee is one that's unique to the individual. So the accommodation costs are advertised, whereas the other ones are calculated in a different method. Does it represent good value? That's a hard one. I see residential aged care as being very valuable. It provides a lot of government funding, a lot of care and support for the individual. So I often think it's good value, and I do believe it's going to go. The cost will go up into next year if these recommended changes are legislated that they're talking about at the moment. And lastly, how do you arrange finances? Can you afford it? This is where you may need to go through the My Aged Care website and explore. You may need to speak with a financial advisor or someone else that's gone through the process previously. I want to use a case study just to give you a real-life example how fees can be calculated, in today's environment. And I've got Madge here as an example. Now, Madge is a widow and she's moving into residential aged care. The deposit that the aged care facility advertising is $300,000. Now, Madge's assets are pretty simple here. She's got 50 grand in the bank and she's got a $500,000 home. And to determine fees, we need to work out, what her assessable assets are. And in this slide, we're looking at, does the home count as an assessable asset? In Madge's case, yes, it will. because there's no spouse or protected person going to remain at the house once she makes that transition. So the home is going to have a cap value of approximately $201,000 for aged care. It does retain that exemption, the capped amount. However, if she did decide to keep it and rent it, the rent will be assessable. When it comes to the age pension side of things, the home would be exempt for up to 2 years. In major situation, there's no spouse there, so we've only got that 2-year exemption. At the end of 2 years, the full value of the home becomes an assessable asset, because then Madge will be considered as a non-homeowner and her home's an investment property. That's how they'll view it. So this is very important to remember, because a lot can happen in terms of after that 2-year period, whether you remain eligible for the pension or whether your care fees will go up. Now, if Madge come and seen us, the value of advice, what we will do initially is review a financial situation. So we'd sit down with either Madge, if she had a partner, we'd sit down with the partner, but in most cases, we're meeting with the sons and daughters. So we're going to put everything on the table and review essentially what her income and assets are, what her age pension entitlements are, and that will give us a huge indication of what her potential aged care fees will be, and if she can afford that or not. The first decision we'll help the family make is, how do we pay for the accommodation costs? Do we pay by that lump sum method, or do we pay by an ongoing interest charge only? We look at her ability to generate cash flow to help cover expenses. Now, she's got a few ongoing expenses in aged care, such as that basic daily care fee and means tested fee, but she's also got personal expenses as well. Now, Madge needs to be able to afford to buy clothes or buy chocolates or cover the cost of a haircut, whatever it may be. And at the end of the day, to tidy up everything from the client's point of view and the powers of attorney, we're looking at estate planning objectives as well. So, does anything we put in force interfere with estate planning objectives and the beneficiaries? Are we protecting the value of assets over that longer period of time? That can be very valuable, and it can be emotionally important to a client or the individual going to care to make sure that their beneficiaries are protected if something were to happen. Okay, with Madge, we'll most likely give her a couple of options here. It's all got to do around the house. And in one case, and you can see that burgundy colour at the top, we'll suggest to sell the house and pay the full deposit of $300,000. If you go down the chart here, from the investment income point of view, she's going to put a few $100,000 back in the bank, and it's going to generate a bit of interest. Madge will get the full age pension, which is just almost $30,000 per year, and her ongoing fees will be the basic daily care fee, which works out to be about the $22,000. Means tested fee of about $4,000. Total care fees of around $27,000. We'll chuck on $100 per week of personal expenses, and we will see in this instance, Madge has the ability to afford care, essentially on autopilot. She's going to accumulate about $1,000 per year in income, so we should expect her cash balances to increase. That to me would be an ideal situation if we've got the ability to sell the home. Now, for sentimental reasons, for estate planning purposes, Madge may, or a family may opt to retain the house. In that instance, we'd probably encourage the family to rent the house to help it work for Madge in that instance. And in this case, $500,000 a house, we can assume that the net rental income back to Madge will be about $350 per week. In this case, we'll go down. We can see her age pension has come down a little bit because of the income test for age pension purposes. Total income has increased because of the rental income, but her care fees have gone up considerably because we weren't in a position to pay that deposit, and the unpaid deposit has been charged 8.34% interest in this case here. Total fees, I estimate, will exceed her income, and there'll be a deficit of about $17,000 per year. Madge has got about 50 grand left in the bank, I believe. We can fund that for 2 years. It may work, but after 2 years, we're going to be in a bit of strife. More importantly, after 2 years as well, pension may come back a little bit because the home will become an assessable asset. So these are things we've got to be mindful of. Which is a better option? Well, financially, one makes more sense over the other, but at the end of the day, we concern ourselves with clients' goals and objectives. So whatever I feel may be the best option financially may not be the best option for the family. So it's up to the family to agree and choose what will work for them for whatever reason they seem fit. But we're always in a position to give our feedback and try and calculate the optimal financial position, and that may be reducing as many aged care fees as we can and sort of maximising income opportunities, whether that be through investments or the age pension, is where we can add significant value. Please avoid rush decisions. Similar with home care packages, residential aged care is just as important, probably more important to some extent. The clients I often see are emotionally charged. It's distressing to see their loved one struggle from a care point of view, and then they've got to worry about their financial decision making on top of that. It is an awesome opportunity to come in early while everyone has the mental capacity to do so and make some pretty great financial decisions by starting the conversation early, whether that be with the family, whether that be researching through the My Aged Care website there, or having a yarn with a financial advisor. So come in early, and it'll give everyone enough time to put a plan in place that if care needs increase to the point where residential aged care or home care packages are needed, you'll have a plan in place, and it'll take a lot of the stress and worry out. Financial advisors can definitely help with that, and provide direction or a statement of advice, whatever the offer may be, to implement a strategy that will work for everyone, with many sort of considerations taken into account. So yeah, definitely get in early with the advice. Now, in terms of, that's essentially what we do as well. And it's not a sales pitch here, but a big part of my job is client education, and making sure that the client or the client's family are heading down the right path. We provide initial appointments at no cost, and they can be general discussions where we give a bit of feedback to say, hey, you're almost there. Have you considered this? Have you considered that? We're happy just to nudge and point in the right direction, but we can also, on the other hand, we can give a full service package, whether that be, okay, well, this is early days. Here's what you need to do from an administration point of view. Here's how and when you should update Centrelink. Here's the assessment forms that an aged care facility may need to determine what your assessable income and assets are to help work out the cost of your care. We can help coordinate a lot of that. But the best part of my job, I think, is the financial direction we can provide. So we start to think strategically about how to structure someone's assets and what they should be doing in order to afford aged care. So we take a lot of that stress and worry away. And then finally, we can provide support on an ongoing basis thereafter to make sure that what we said a client or the family should do is what actually happens. Where that can be beneficial is if it takes a while to redeem a lump sum, such as selling the house. Settlement may have just happened. What do we do and when do we do it? It is that ongoing direction we can provide and sort of review care expenses or Centrelink entitlements to make sure that what we projected and what we modelled would happen actually occurs. So there's a lot of that support as well. But what I might do after today's presentation is just hopefully we're taking a recording of this now. I can see the record button going. I'll send out a copy of this presentation for all our people who registered to attend, and also my details as well. So I encourage, to give a bit of feedback, to shoot through some questions. I'm happy just to give some general information back, and also there will be a link there to book an appointment if you think that's beneficial. Now, that could be either, for locals, it's face-to-face here in the office, or for those who've got some distance or who aren't able to make it into the office, we can just essentially do a Teams meeting like how we're presenting this today. So whatever works for you will work for us. As I mentioned, an initial appointment may only go for 20-30 minutes, and it's at no cost. We can, see how we may be able to help, and you can explain your situation, and we can take it from there. But that pretty much wraps up the presentation today. Thanks everyone who attended. For those who couldn't make it, we'll certainly send through this information now, and we'll reschedule another one of these presentations as soon as we can. But yeah, appreciate everyone who's taken the time to tune in today. Thanks very much.